I'm joined now by Independent TD Stephen Donnelly and Fine Gael TD Kieran O'Donnell. First of all, Stephen, I mean, you were very strong on wanting those bankers to come before the Oireachtas Committee. Needless to say, we asked them all to come in tonight, but they weren't available, nor was anyone from the Banking Federation. But you believe more could be done for distressed homeowners. Spell out for me what you think the government could and should do.
I do. I think there really are solutions. We're 5 years into this crisis. The previous government did absolutely nothing. This government is doing something. It's done two things. It's brought in the insolvency legislation. Imperfect, hasn't gone far enough in my opinion, but definitely a huge change. And it's brought in these targets with the central bank. The targets, I believe, could go further. So this government has done something. It needs to go further. The problem with the targets is the targets are saying to the banks, you've got to get rid of the arrears. But the mortgage arrears, the high arrears, aren't the problem. The problem is households have too much debt relative to their income. And I think what Kieran, myself and the Finance Committee saw, we had the 4 banks in over 3 days this week, is bad news and good news. The bad news that I took out of it was, if the banks are allowed to proceed and hit the targets in the way that they are hitting them right now, the mortgage crisis will not go away, it will become hidden. That will stagnate the economy, and it will take us years longer to get out of this mess. The good news is some of the banks, and I think particularly AIB, are doing some good things. The start of a debt for equity mortgage has come in. I'd like to see that go much further. Personally, I believe a proper debt for equity solution could be an enormous benefit to a huge number of people. We've seen split mortgages with 0% interest on the shelved portion from 3 of the banks. We've seen nothing, in my opinion, from Bank of Ireland. Bank of Ireland is a very good example of, I think, the least helpful behaviour for the country. I went through with Richie Boucher all of the so-called offers of sustainable solutions. And in at least 90%, and it's probably much more, actually the customer, the borrower, the Irish citizen, is going to end up paying more money back. And just on that, so the solution for Bank of Ireland to too much debt is more debt. I think that the government can, and we and the Oireachtas can solve the problem.
I mean, Kieran, 2.5 years in government, and I hear what Stephen's saying. Yeah. He's saying some good things have been done, but when that point about sustainable solutions, are you happy with banks writing to people as a sustainable solution that they're going to repossess their house, sending them legal letters saying the solution is we're just going to repossess your home?
No, if you're taking it strictly as a legal exercise like that, if it leads to sustainable solutions, I can live with that. I think what's now needs to feed in, an audit is about to be carried out by the central bank. They have the powers in which to ensure that the banks provide sustainable solutions, and it's the first audit. So if the banks are not providing, we'll say, solutions that people can afford, they can impose extra targets, they can impose extra provisions that the banks would have to provide, and the banks are fully aware of that.
I mean, at the end of the day, you're the government. I mean, some of them are seriously capitalised. But I mean, for instance, the split mortgage notion, yes. But we then saw warehousing is going on. So the interest on the warehousing amount is just going to accrue and people will end up with even more debts.
Of the 4 banks, only one institution was charging the same rate of interest on the warehouse, which was Bank of Ireland. The other institutions were charging 0%. But I think the personal insolvency legislation is coming in as well, so it's a suite of measures. And the targets that were brought in last March, 20% to be in place, of offers to be in place to people with mortgage and arrears by the end of June. That goes up to 30% by the end of September and 50% by the end of the year. That was brought in by government. We are going to bring the Governor of the Central Bank in before the Finance Committee on the 25th of September, just under 3 weeks away, to ensure that mortgage holders get fair treatment.
OK, but we hear about targets, central bank auditing. At the end of the day, we saw even somebody there in Aoife's report. People at the moment are desperate. What about the split mortgages? Were you worried about that?
The split mortgage is better than nothing, because the split mortgage says, look, you can't make your repayments, so we're going to take a portion of that, we're going to put it on a shelf, and we're not going to charge you any interest on it. The problem with the split mortgage, imagine tens of thousands of households had these split mortgages. The problem is, the catch is, if you better yourself, if you go and you retrain, you go back to work after raising your kids, you go and you do your master's degree, everything that you get, we're going to knock on your door and we're going to take half of it. It leads to a marginal interest rate. The government takes 52%. The bank comes along and takes 1/4 left. You're left with 24%. So my concern with the split mortgage, whilst it's better than nothing, is that it'll suck all the money out of the economy for years to come. And that's why rather than a split mortgage, a debt for equity that says we're not going to shelve the portion you can't pay, we're going to take equity in your house would solve that.
The banks have been provided with the necessary capital to deal with write-offs. Some of the banks are providing it, some of them are not. The one thing they came across at the committee earlier this week was the lack of consistency between the institutions. And I think
Well, why don't you make them consistent?
this is going back to the central bank. That's their role. We've given them the powers. We've put the targets in place. And behind every loan, there's a family, there's an individual. And that's why they have to be treated on a case-by-case basis. And what we want is consistency of treatment for people. So if you have two individuals in two separate institutions with the same type of mortgage, they're entitled to similar treatment.
But that sounds great, Kieran O'Donnell. But how are you going to ensure that? Like, this sounds wonderful to people at home, but they're saying, you're the government, sort it.
Within the guidelines that were brought out by the central bank and the powers we provided by the central bank, that's there in black and white. And now that it is being carried out, and by bringing the Governor Central Bank in before the Finance Committee in 3 weeks, we'll ensure that happens.
I think there is a misunderstanding here. My understanding from senior people within the central bank is that they do not have the executive authority to order the banks to do things. They can lead,
so who
they
has
can
the
influence.
Authority? It's the central bank.
Stephen, have you read the regulations and the guidelines?
I have, in great detail. What the central bank are telling me is that they are doing what they can with very limited executive authority. My understanding is the only group of people in this country who can look at the best of what's going on, improve it, and then mandate that the banks do what is best for the country and doesn't destroy the banks is the politicians and ultimately, Michael Noonan.
Okay, you're saying it's the central bank, Stephen.
No, what I'm saying is we have to wait for the central bank to carry out this audit.
They're saying they don't have the power.
No, we need to see the process. They have stated publicly, both in verbally and in writing, that they will impose extra provisions on the banks if they do not provide sustainable solutions. And you've different solutions with different banks. We need consistency, and it must be affordable. And I suppose the underlying theme is, where at all possible, we need to keep people in their family homes. And that's something that would be a bottom line.
But we just heard this week, as I said to you earlier, about all the sustainable solution letters going out for repossession. That's hardly encouraging people to stay in their homes.
Once again, different volumes across the banks. In my view, certainly I was not happy about it. We need to see exactly what the banks are going to do to ensure that these translate into proper solutions that people can afford. People are not replying to advance for various different reasons.
Okay, I suppose Richie Boucher, to be fair, made a point this week that forbearance has a cost. It'll end up with the taxpayer probably paying, and then they can lend less.
Yeah, I think that was slightly spurious. It won't end up with the taxpayer. Bank of Ireland is a privately owned bank. So what he's saying is, I don't want my shareholders to incur any cost, and therefore I'm not going to do what the other banks are doing, which is offer 0% on the split mortgage. So that's a spurious argument. But however, in Richie Boucher's case, and in any chief executive of any bank, their job is not to fix the country. Their job is very clear. You're
saying it's Kieran's
their
government.
job is to fix the banks. Now, there's two things can be done here by this government. If I could just finish on this, Kieran, there's two things can be done.
Quickly.
The first thing is the two state banks, Permanent TSB and AIB, can be given a dual mandate to both fix the country, help the economic recovery and protect the banks. And the second thing that can happen is the private banks, which are under no obligation to do that, can be told what to do. And that's what we need to see.
A key element in terms of continuing the recovery is ensuring that people have debt that they can manage, both in terms of household debt, in terms of residential and business. And you had business people on there earlier. We have to ensure that we can decouple, we'll say, property loans from business loans so we can keep jobs going. And I think the point overall is the banks have a key role to play. And furthermore, if you look back on
but they need to be controlled at this stage, and you're the government, and you should be controlling
ultimately the powers, in terms of regulation, is carried out by the central, and we've given them the legislative powers to do that.
Okay, last quick question. Personal solvency legislation. A lot of people are hoping this is going to save them. Those clawback clauses, are you worried about those, that they can go into the future and just come back after people?
No, because the key focus for the personal solvency legislation is to ensure that people can get their debt to a sustainable level. The only reason that would arise is if the property sold for a much higher value and a profit was made. So once again, when you look at the person, its remit is to ensure that people can get their debt to sustainable levels and remain in their family homes.
Stephen Donnelly, somebody tells me we're going to be talking about banks endlessly. Thank you both very much for coming in tonight. See you again.